Hey there, investors. Are you ready to hear about a stock that's been beaten down but is poised for a massive comeback? I'm talking about Confluent, a company that's down 71% from its all-time high. Now I know what you're thinking, why be excited about a stock that's tanked? Because Confluent is a leader in real-time data streaming. This technology is transforming industries from finance to healthcare to e-commerce. A 71% drop can make any investor nervous, but sometimes the market gets it wrong. Confluent is fundamentally sound with a strong business model and growing customer base. Wall Street analysts are bullish, predicting triple-digit returns. This could be your chance to buy a future tech giant at a bargain price. Now, let's address the elephant in the room, that 71% drop. It's no secret that Confluent, like many high-growth tech companies, got a little ahead of itself during the market euphoria of 2021. Investors were pouring money into anything with a pulse, and Confluent, with its exciting story and massive potential, was swept up in the frenzy. As a result, Confluent's valuation soared to unsustainable levels. Its price-to-sales ratio, a key metric for valuing growth companies, reached astronomical heights. At its peak, Confluent was trading at over 50 times its revenue. Now don't get me wrong, Confluent is a great company, but no company is worth 50 times its revenue. That kind of valuation is simply unsustainable, and a correction was inevitable. And a correction we got. As interest rates rose and investors started to sober up, Confluent's stock price came crashing back down to earth. But here's the crucial point: the underlying business remained strong. Confluent continued to grow its revenue, expand its customer base, and innovate at a rapid pace. In other words, the fundamentals of the business didn't justify such a dramatic decline. Today, Confluent's price-to-sales ratio has fallen to a much more reasonable level. While it's still not cheap, it's now in line with other high-growth software companies. This suggests that the market has overcorrected and that Confluent's stock is now undervalued. Okay, enough about the stock price. Let's talk about what Confluent actually does. In a nutshell, Confluent is a data streaming platform. It helps businesses move massive amounts of data in real time. Think of it as the plumbing for the modern data-driven enterprise. Now you might be thinking, Jim, data streaming? That sounds kind of boring. But trust me, this is a big deal. We're living in a world driven by data. Every click, every transaction generates data. And businesses that harness that data in real time have a huge advantage. That's where Confluent comes in. Its platform connects data sources and streams data to where it needs to go. This enables faster decisions, better customer experiences, and innovation. Confluent's financial engine powering growth and profitability. Alright, so Confluent is in a hot market and its technology is in high demand. But what about the numbers? Well, here's where things get really exciting. Confluent is firing on all cylinders, with impressive revenue growth, expanding margins, and a clear path to profitability. In its most recent quarter, Confluent's revenue surged by over 60% year over year. That's right, 60%. This explosive growth is being driven by both new customer additions and increased spending from existing customers. Companies are realizing the power of real-time data streaming, and they're flocking to Confluent's platform. But it's not just about top-line growth. Confluent is also making significant progress towards profitability. Its gross margins, a key measure of profitability, are expanding rapidly as the company scales its business. This indicates that Confluent is becoming more efficient and that its profits are growing faster than its revenue. Of course, Confluent is still not profitable on a net income basis, but that's not unusual for a high-growth software company that's investing heavily in research and development and sales and marketing. The important thing is that Confluent is moving in the right direction and that it has a clear path to profitability. The AI revolution's unsung hero Confluent fuels the future. Now let's talk about the future. One of the most exciting things about Confluent is its role in the artificial intelligence revolution. AI is all the rage these days, and for good reason. It has the potential to transform industries and solve some of the world's most pressing problems. But here's the thing, AI is only as good as the data it's trained on, and that's where Confluent comes in. Confluent's real-time data streaming platform is essential for building and deploying AI applications. It allows businesses to feed massive amounts of data into their AI models in real time so that those models can learn and improve over time. For example, imagine you're a self-driving car company and you're building an AI model to help your cars navigate the roads. With Confluent, you can stream data from your car's sensors, cameras, and GPS systems into your AI model in real time. This allows your model to learn from every mile driven and become a better, safer driver over time. Or let's say you're a healthcare company and you're building an AI model to diagnose diseases. With Confluent, you can stream data from patient records, medical imaging, and wearable devices into your AI model in real time. This allows your model to make more accurate diagnoses and provide more personalized treatment recommendations. Wall Street's bullish chorus analysts sing Confluent's praises. Now I know what you're thinking, Jim, this all sounds great, but what do the experts think? Well, I'm glad you asked. Wall Street analysts are overwhelmingly bullish on Confluent, with many predicting triple-digit returns in the coming years. According to TipRanks, the average analyst price target for Confluent is $45, representing a whopping 120% upside from its current price. And that's just the average. Some analysts are even more optimistic, with price targets as high as $60. So what's driving this bullishness? Analysts cite a number of factors, including Confluent's large and growing market opportunity, its strong competitive position, its impressive financial performance, and its role in the AI revolution. They believe that Confluent is well positioned to capitalize on the secular trends of big data, cloud computing, and artificial intelligence. Of course, it's important to remember that analysts are not always right. They're human, just like us, and they make mistakes. But when there's this much consensus among analysts, it's definitely worth paying attention to. The bottom line: why Confluent could be your portfolio's next big winner. So there you have it. Confluent, a high-growth, high-potential company that's been unfairly beaten down by the market. With its leading position in the booming market for real-time data streaming, its strong financial performance, and its role in the AI revolution, Confluent has all the ingredients to be a multi-bagger for investors who are patient and believe in the long-term story. Now, I'm not saying that Confluent is a sure thing. No investment is. There are always risks, and Confluent is no exception. But for investors who are looking for a high-growth, high-potential stock with a compelling risk-reward profile, Confluent is definitely worth considering. Remember, fortunes are made in times of market dislocation. When others are fearful, that's when the smart money is greedy. And right now, there's a lot of fear and uncertainty in the market. But that's creating opportunities for investors who are willing to do their homework and invest in great companies with bright futures. And in my opinion, Confluent is one of those companies. So, do your own research, talk to your financial advisor, and make an informed decision. But don't let this opportunity pass you by. Confluent could be your portfolio's next big winner.